This is the future of finance.
This episode is brought to you by Metis Global Partners and by the Intentional Endowment Network's 2025 Annual Forum, taking place October 27th and 28th at Goucher College in Baltimore, Maryland. Hi, everyone. Welcome to the Future of Finance podcast. I'm George Dyer, and today we're doing another in our series where we're sharing out conversations from the Intentional Endowment Network's virtual forum that we held back in June. This one is focused on why investors should be concerned with political risk and threats to democracy. And it features two great speakers, Philippe Bolopion and Lauren Kaplan. And it's a great conversation. We're seeing democratic backsliding in the U.S. with the administration breaking down democratic norms, engaging in corruption and self-dealing, and attacking institutions that are essential to a strong democracy like universities, civic organizations, and the free press. And we're seeing similar trends in other countries around the world. So this is a really timely discussion, not just about why this is bad for America and democracy, but what it means for investors and what investors can do about it. Philippe is managing director and co-head of long-term investing at the asset management company TOBAM, which has a new strategy range called Liberty, which aims to strongly mitigate the exposure to countries governed by autocratic regimes in their portfolios. TOBAM manages over $2 billion in assets in equities, fixed income, and multi-asset strategies, as well as digital assets. And Lauren is the director of governance and risk integration at Third Side Strategies, which helps companies to reduce risk and enable long-term value for business and society by strengthening the governance of their public affairs in today's turbulent environment. I got to know Lauren years ago when she was at Common Fund, and after that, while she worked in Yale's investment office as the associate general counsel. She's very thoughtful and doing some really interesting work now on how investors can better manage their exposure to political risk. Lauren and Philippe make a lot of great points throughout the conversation, including how democratic countries drive economic growth, innovation, and stability, making them more attractive long-term investors. And autocratic countries are associated with declines in GDP per capita, rising conflict, and increasing investment risk. They talk about how due diligence and seeking information are key when evaluating political and governance risks in investment portfolios. And like I said, it's a great, timely conversation. So I hope you enjoy it. Thanks as always for listening. Please follow the show, leave us a rating or review. It really helps us to get these ideas out there more. And now here's Lauren and Philippe. So obviously this is a topic that's top of mind for many of us here in the U.S. And we wanted to dive into that, but also get lessons that we can learn from other parts of the world that have faced sort of democratic backsliding and what it means for investors and markets. So Philippe, I wanted to start with you in that regard and just ask you to tell us why investors should be concerned about political risk and threats to democracy in general and globally.
Well, thank you, George. I think they should be concerned because more and more they are deeply affected by it. Why? Simply because over the last 20 years, democracy has been receding in the world. It's a very well-known phenomenon. It's something that the scholars call the democratic recession. And they show that for 20 years in a row, year after year, there is less and less democracy in the world. In fact, the scholars say that the world is back to the freedom and democracy levels of the mid-1980s. So it's a very dramatic recession that very few people are keeping an eye on. And as democracy is receding around the world, conflict is coming back. And there is a lot of link between autocracy and conflict. Autocratic countries are much more prone to crisis than conflict. And so as an investor, if you have international, portfolios, it means that more and more they are subject to the whims of autocratic leaders around the world. And there is a lot of data showing that it will actually, over the long run, impact the performance of your portfolio. The latest Nobel Prize in Economy, Daron Acemoglu, an MIT researcher, has shown a very clear link between democracy and macroeconomic growth. It can show that democracy causes growth and that autocracy is actually at the macroeconomic level, is causing the GDP per capita to go down whenever a country is on a path to autocratization. And what my firm has done is study the impact of autocracy on companies. And we can show that what's true at the macroeconomic level is also true at the company level, at the stock level, meaning that if you own in your portfolio stocks that are very exposed to autocratic countries such as Russia, China, Saudi Arabia, Turkey, Pakistan, countries like that, well, in the long run, it will deteriorate the performance of your portfolio. So as a rational investor, forget about, whether you believe in democracy or not for a second. As a rational investor, it's actually a risk for you, and it doesn't make sense to be exposed to it because it's an unrewarded risk.
Yeah, it makes a lot of sense. I mean, I think there's a lot of intuitiveness in that when less trust can lead to less functioning in markets, but to have that data, I think is really, really compelling. So we'll come back to some of that, but Lauren, want to switch over to you and just ask that given these risks, how should companies be thinking about their role in preserving democracies and and trying to work against that backsliding or that recession, as we call it? And what role can investors play, particularly in the U.S. at this moment?
Sure. Yeah. No, thanks. Thanks for having me and bringing us all together. So just to build on what Philippe was saying in terms of what I think what from the investor perspective, what should investors be doing? I think first is recognizing what's happening on the ground. And so, Philippe laid out for us at a high level the links between, seeing moves towards autocracy and the impact that that can have on the operating environment, on the economy and markets, and just the idea that, we know that stable, predictable, reliable government institutions are really fundamental for innovation and for competition, and all of the creates the environment that allows companies to create value for all of us. Um, and particularly if we focus in on the US a little bit, right now we see every day, right, the chaos in terms of whether it's tariff policies changing almost what feels like by the hour, federal funding being frozen, on everything from big infrastructure projects to research. We're seeing it on the ground on a daily basis, and companies are caught in the middle. On the one hand, navigating, once in a lifetime operational and strategic challenges. Yesterday, we heard that extremely helpful panel on AI and sort of all the challenges and opportunities that AI brings. There's, other large shifts companies are having to contend with, whether it's, energy supply and climate change impacts or changes to kind of workforce considerations. So companies are caught in the middle of navigating all of that, also amid kind of competing stakeholder considerations and this chaotic climate of, regulatory climate. And so we see in real time these kind of strategic, operational, financial, and reputational risks for companies. And yesterday, John Lukomnik, opened the forum with such a clear conversation around systemic risk and, how fiduciary duty really requires investors to be thinking about systemic risk. And in a way, sort of the weakening of rule of law is the ultimate systemic risk, right? It's much harder to tackle any of these other problems, whether it's climate change or AI. It's much harder to tackle those problems if we don't have working government institutions that are stable and predictable. So what investors can do is, one, ask more questions. This is sort of the low-hanging fruit, but we've seen this be quite effective, whether the early days of ESG or other issues. Asking more questions of the companies in which you're invested, either through your investment managers or if you're invested directly. That sort of has two benefits. One, it will get, all of us as investors more information so we can do what Philippe was saying, which is better manage our portfolios to be able to see this risk across the portfolio. But it also will prompt companies to think more closely about their we sort of at Third Side Strategies, we talk about it as as a broad public affairs, but the company's involvement in policy matters defined broadly. It'll prompt the companies to think more carefully about those, identify areas where they might be able to potentially strengthen their practices. And so some of the thinking about how to ask these questions or what the categories are at the company level, really it's about how are they making decisions? Because a lot of these decisions at a company level about what policy areas to engage in and which not to, when to make a statement and when not to, they're not straightforward, right? They're complicated. There's a lot of trade-offs there. So as an investor, it's helpful to understand, does the company have in place a good framework for how they make the decisions internally so that they can do it in a consistent way and in a more forward-looking way that's really tied to their strategy, their long-term strategies. So some questions to ask, one, are around that issue prioritization process internally at the company. So how are they making those decisions? How are they making trade-offs, whether it's between different competing policy priorities of the company or whether it's between different corporate goals? So maybe a company has made a climate commitment on one side, but also has policy priorities related to its underlying operations. So how does it balance those in a consistent way? And how is it balancing considerations between stakeholders? Because as we know, employees, consumers, shareholders don't always, agree on different issues. And so how does the company navigate that? And then the second area to ask questions on is around oversight. So what is the company's process for reviewing their public affairs decisions? Do these decisions go up to the board? Which decisions do? Do they require approval of the board? What information does the company share with investors, with the public around their public affairs decisions, as well as how they're making them? And then to make some of this more concrete, some areas investors can think about are, looking at your investment management agreement, potentially putting in, or side letters, and potentially putting in language around, that political risk in the U.S. or public affairs governance are material issues to you as an investor, and that they ought to be considered in your investment manager's work on your portfolio. And then the second part, just quickly, is to look at ourselves as investors and kind of get our own house in order too, right? So we have opportunities to think about policy engagement and how we look at these issues. And that means reviewing our investment policy statements, making sure that we include a reference to U.S. political risk and this idea of broader public affairs governance considerations, and reviewing our own alignment between our investment priorities and some of the public affairs, political activities of our underlying investments. And along with that same thing, thinking about your investment committee, what of these issues goes up to the investment committee for review? Do they do a political risk review across the portfolio? What information does the investment committee get? And lastly, would it be helpful for the investment committee to get any additional education or resources in this space? And that's one of the reasons why we launched, my colleague Elizabeth Doty and I launched Third Side Strategies, was really to help provide resources in the space. We call all of this CPR, corporate political responsibility governance, but it's really public affairs decision making. And so we just launched a week ago, and we have a website that has a lot of resources put out both by ourselves, but also by many of the organizations you've been hearing about during the forum, hearing from, and a lot of other great partners in this space. And we've really tried to create a curated collection of resources that investors and companies can turn to help sort of diagnose and implement. And just two quickly that I'd point you to are our YCPR section of the website, which goes through, I think, pretty concretely, why this is so important right now. And then to our showcase, which is where we have all of these resources. And specifically within the showcase, there's a fulfilling fiduciary duty and purpose section, which I think could be of interest. But we're here to help and look forward to talking more about it. But also we're here for questions and just want to be a resource to everyone who's navigating through the space.
Fantastic. Thank you, Lauren. And yeah, we just dropped a link to that hub in the chat. So definitely check that out. Lots of great resources there. This episode is made possible by Metis Global Partners, a global equity solutions provider managing over $5 billion. Metis offers both active and customized beta strategies for institutional investors. Through their guided beta product suite, Metis provides custom passive equity solutions to clients desiring sustainably aligned equity and real asset portfolios combined with a high-touch partnership. Founded in 2013 in San Diego, California, Metis serves a wide range of institutional clients, including foundations, endowments, nonprofit, university, public plan, corporate, and family office clients. To learn more, visit www.metisgp.com. That's metisgp.com. or email info@metisgp.com. The Intentional Endowments Network's 2025 Annual Forum will take place on October 27th and 28th at Goucher College in Baltimore. This forum will convene 100 to 150 endowment, foundation, and sustainable investing industry leaders to discuss how to maintain intentional investing momentum at your institution, covering topics including system-level investing, the fiduciary duty case for sustainable investing, strong democracies and political risk, climate risk and opportunity, responsible technology and artificial intelligence, inequality as investment risk, and taking an expansive approach to talent. The program will be designed for endowment and foundation trustees, chief investment officers, and investment teams, as well as practitioners from investment consulting, outsourced CIO, and asset management firms. IEN events are intentionally designed to be highly interactive with plenty of time dedicated to dialogue at roundtables and networking, in addition to excellent presentations from experts and peer institutions. Go to intentionalendowments.org and click on Annual Forum to learn more.
You know, as we look at examples of countries backsliding, Philippe, that you see around the world, and you sort of look at what's happening in the U.S. today, are there certain signs that sort of catch your attention the most in terms of some of the, whether it's attacks on the media or universities or political norms or democratic norms or political opponents, things like that? Is there anything that really kind of stands out in terms of red flags?
Yes, I mean, I would say there are certainly a few, but first to put things back into context, in our assessment, it's really autocratic countries that detract value from companies that are exposed to them. And, the US may be sliding back in terms of democracy rankings. That's certainly what the scholars in the field are saying. But in our methodology, it's still nowhere near a place where it would be blacklisted or where we would consider that the being exposed to the US government will detract from the long-term value creation of a company. So, within our strategy, we don't blacklist even a country like India, which is quite, I would say on the verge, in the gray zone. But the US is significantly better ranked. Again, it's not my opinion or TOBAM's opinion. It's really the opinion of the VDEM Institute in Sweden. That's probably the most respected academic source. Or if you look at Freedom House or the Economist Intelligence Unit. So that's a big caveat. We understand the concerns, but the US is still a strong democratic country with a lot of checks and balances that are certainly being tested. But the answer as to whether they will hold or not, I think is still an open question. Now, do you start seeing some of the features that make autocratic governments unattractive for investors in the long term? Maybe, when you see that certain businesses in the US seem to be favored by the White House, or when there are concerns about, the family of the president being, able to profit. These are things that you find typically in autocratic government where the ruling class and the top business leaders in the field are very intertwined. They have a lot of common interests. They are being favored by the government, and part of how a company can be successful in China or Russia or Turkey is by being able to navigate these relationships and these complexities. And if you're an excellent business there, but you're not favored by the government, well, you may suffer in the long run. And as a result, your shareholders will suffer. So the short answer to your question is, yes, we are keeping an eye on this type of dynamics, the unpredictability as well. Lauren was mentioning it, part of why sometimes autocratic governments are not good from an economic standpoint is that they make economically irrational decisions, unpredictable. And as a result, the business environment has to try to adapt to that. And sometimes it's costly. So certainly reasons to worry, but of course, the US is nowhere today near Russia, China, Turkey, countries that are considered autocratic and problematic from an investment standpoint.
Yeah. How about you, Lauren? Are there, of that sort of pattern, are there certain signals that jump out for you?
Well, I think that like one thing that I'm concerned about is even if to Philippe's what's like even if the systems hold, and obviously there are lots of challenges going on right now in the courts, to many of the executive orders and other things that are sort of the most troubling. Even if that holds, the sort of disruption that it's creating is having impact on companies' decisions right now around their research and development, around their capital, CapEx decisions for, medium and longer term projects. And so I am concerned that, the impact of some of this, even if the system holds, there still could be a significant impact even down the road. And so I think that's part of the reason for thinking about what can investors do right now is to let's just stop the progression, right? So we don't get to the autocratic countries that Philippe is, talking about. We don't want to get there, but I think there's still a lot of risk right now. And part of the challenge of dealing with it is this overwhelm, right? That there are so many, just the instability. There's so many things happening that are creating confusion and making it hard for companies to make decisions. And you can almost kind of lose the thread in the overwhelm. And so it's more that, and that we're seeing it in almost every sector. We're seeing it in media. We're seeing it in, trade policy, et cetera. So I think we don't want to lose the thread of what's going on and kind of stay focused and try to push back in these ways that are based, at the companies themselves in terms of the decisions they're making.
Yeah. Yeah, I got you. Well, we are unfortunately running up against time, and I have lots of more questions I'd love to ask you, but let me ask you just a really quick one, just a rapid response. And Lauren, you kind of addressed it already, but a call to action for investors. What if there's just kind of one thing that investors could do tomorrow to help address this sort of systemic risk? Lauren, you want to go ahead first and just pick one of the
Sure. Yeah, I think just what I said, I would just start now. So like I said, asking questions is low-hanging fruit. So to go ahead and start asking those questions, because that process is going to prompt action, I think.
Philippe, how about you?
I would say think about democracy before investing in a company or in a country. It's quite hard for me to understand how over the last 20 years, as democracy was receding in the world, very progressive investors in Europe, in the US, including university endowments, have invested sometimes with abandon in China, in Turkey, in other autocratic countries, without thinking about how the nature of the regime would impact their long-term performance, let alone how it would impact the trajectory of democracy around the world. So for me, that's the most transformative idea. If people realize that autocracy is an investment risk, then it could completely change the way we allocate capital around the world, and it would penalize autocratic countries, and as a result, create an incentive for them to democratize.
Fantastic. All right. Well, Lauren, Philippe, thanks so much to you both.
This episode has been brought to you by Metis Global Partners and by the Intentional Endowment Network's 2025 Annual Forum, taking place October 27th and 28th at Goucher College in Baltimore. Thanks for tuning in for the Future of Finance podcast. We hope you found today's conversation insightful and inspiring. Don't forget to subscribe or follow us on your favorite podcast platform. And please take a moment to rate, review, or share the show. All of this really helps us to reach more people like you who care about creating a thriving and sustainable future. And it's a really easy way to have a big impact. So please do follow. A quick disclaimer, the content of this podcast is for informational purposes only and does not constitute investment advice. Investments and strategies discussed may not be suitable for all listeners. Please consult a financial, legal, tax, or accounting professional before making any investment decisions. References to managers and funds are for informational purposes only and should not be considered endorsements or investment solicitations. This podcast does not monitor fund performance or guarantee the accuracy of third-party materials or statements. This has been an episode of the Future of Finance podcast, exploring how finance can shape a vibrant and sustainable future. Thanks for listening, and we'll see you next time.